towards 23,300, 23,370 and upside. First majorly support place around 23,170 at downside, and below that 23,100 is a major support for index. So Nifty range is 23,100 at downside and upside 23,370. This range for today and maybe before budget event. If Nifty clear the 23,370 budgets after budget session, and we expect further move towards 23,500, 600 and upside. Bank Nifty also trading near the support zone, that is 49,200, 49,000 at downside. Upside, first immediate resistance place around 49,540. Above that, we expect further rally towards 50,000 and above range. To majorly, we expect both index trading today is flattish, but within that range bound moment during the day. Stock specific BL looks positive at current level. Grasim also given a good rally yesterday, last two trading session. We expect this momentum to be continue in Grasim also. Granules also looks positive at current levels. Negative side, CAMS yesterday break the important support, that is 3670, and yesterday closed below that important support zone. So we expect some pressure to be continued in CAMS. LNT also trading near below the important support zone. Yesterday we saw some pressure in last half an hour, last 1 hour, and we expect this pressure to be continue. If LNT trading below the 3400 and may break today again 3400, then we expect further sell off towards 3340, 3320. That's it for technical derivative guy can carry.
Yeah, thank you, Vikas. On the derivative front, see, expiry has been done yesterday, and most of the indicators are still the same. Good thing is the VIX decreased after a long time yesterday from 19 odd levels to 17 odd. Which is a good thing. Open interest also decrease. Obviously, it has to decrease because of expiry, but for this series as well, a lot of open interest is carried forward. That means a lot of shorts have been rolled over, and that is a negative sign. So definitely, you can probably see, some more selling coming in. PCR around one is still, now at comfortable level. So all in all, expect Nifty to witness some resistance around this 23,500 levels, and post that some more selling can come in. So next couple of days can be of consolidation. From the support level, 23,000 is a very good support area. If that is crossed below, then you can see further selling coming in. For the stocks, at this point, banking saw good short covering action. Furthermore, can be seen next couple of days. And IT is one sector where some sort of shorts have been built in. So probably some selling can come in there. So look out for the same. Yeah, that's it from my side. Like to have the fundamental team to take over, please.
Thank you, Nirav. Good morning, everyone. On the chemicals front, yesterday SRF Limited hosted the con call. In the con call, the management highlighted that there was a decent recovery observed during quarter three, backed by the strong contribution from the chemicals business and stable performance in the packaging film business. The same has enabled to post the result above expectations. Among the key discussions, the management has addressed challenges in each segment, such as in agrochemicals, it has seen persistent overhang from the inventory built up at customer end. But new product launches has driven the growth in the decent manner. Also, it expects new 3 to 4 registrations in active ingredients to drive the growth quarter 4 onwards. In technical textiles, belting fabrics remain under pressure due to lower demand and margin. The focus will be on value-added products going forward. And in other segments, the coated fabric business has performed weak, while maintaining its dominant position in the market. Its laminated fabric segment has seen decent performance, and integration of new hot lamination machine is expected to improve the margins for the segment. The stock is currently trading at 47 times to FY26 earnings, and we remain long-term positive on the stock. Clean Science and Technology posted the results yesterday. Results were in line with expectations. Revenue grew by around 24% on a YY basis. The result was led by strong volume growth of 20% of basis, and the margins improved by around 324 basis points on a sequential basis. Thus, EBITDA margin reported ahead of expectations at around 41%. The margin improvement was largely on account of saving in power cost and operating leverage. Overall performance, chemical segment has seen strong performance with 31% YY growth, followed by pharma intermediates with 24% growth. The management is scaling up its HALS portfolio and expects to focus on higher realization products in FY26. In addition to this, there are upcoming several new projects which will drive the overall growth. The stock is currently trading at a PE of 41 times to FY26 earnings, and we are positive on the stock. Navin Fluorine International posted the results ahead of expectations, both in terms of revenue and margin level. Revenue grew by around 21%. Overall EBITDA grew by around 95%. And operating margin reported at 24.3% compared to last year's margins of 15%. Overall performance was backed by higher realization in HPP portfolio and higher utilization at the H facility. The management is positive on CDMO and specialty chemicals, where there is a visibility in order book for Q4 FY25 and FY26. The management has guided for 25% EBITDA margin FY25. Also, future growth can be derived from the capex invested in projects such as R32 capacity, AHF, and CGMP4 facilities. The stock is trading at a PE of 46 times to FY26 EPS, and we are positive on the stock. Coromandel International Limited posted the results in line with expectations. In terms of revenue and margins, it has observed growth on YY basis. Revenue grew by around 27%, and margin was reported higher at 10.4% versus 6.5% in the same quarter last year. It has witnessed strong volumes from nutrient business that led to overall growth, and both the segments have seen margin improvement. The stock is trading at a PE of 25 times to FY26 EPS, and we will provide the outlook post the con call. Thank you.
Good morning. Waaree Energies reported a significant improvement in performance this quarter. Revenue declined by 3.3% quarter-on-quarter, but showing a robust 116% year-on-year growth. EBITDA grew by 38% quarter-on-quarter and 322% year-on-year. EBITDA margin expanded significantly to 20.9% versus 14.7% quarter-on-quarter and 10.7% year-on-year. It's because they have started solar cell production. PAT is also increased on quarter-on-quarter and year-on-year basis. Stock is currently trading at P of 75 times TTM EPS. Overall, the company has delivered strong margin expansion and profit growth. So our outlook is positive in Waaree Energies. Bharat Electronics posted the result. Revenue increased by 25.6% quarter-on-quarter and 39% year-on-year. EBITDA increased by 18.4% quarter-on-quarter and 56.7% year-on-year. EBITDA margin came at 28.6% versus expectations of 24.4%. It is also above expectations. And stock is currently trading at P of 35.7 times FY26 EPS. So overall result is improved. Praj Industries result has declined. Revenue is little increased on quarter-on-quarter and year-on-year basis, but EBITDA declined by 22.8% quarter-on-quarter and 25% year-on-year. EBITDA margin came at 8.5% versus quarter-on-quarter 11.5%. It is declined on quarter-on-quarter and year-on-year basis. And stock is currently trading at P of 28.7 times FY26 EPS. L&T posted the result below expectations. Revenue grew by 5.1% quarter-on-quarter and 17.3% year-on-year, but EBITDA declined by 21% quarter-on-quarter and 13% year-on-year. EBITDA margin came at 9.7% versus expectations of 10.6%. PAT is below expectations. But company's order inflows increased by 53% year-on-year and order book increased by 20% year-on-year and 10.5% quarter-on-quarter, both above expectations. Uh, and stock is currently trading at P of 24.5 times FY26 EPS. So overall outlook on L&T is positive. Thank you.
Good morning. Bank of Baroda posted its results. Results were broadly in line with expectations. Advances grew by 10% year on year and 0.7% sequentially. Net interest income grew by 2.8% year on year. Net interest margin came at 2.94% versus quarter on quarter 3.1%. Profits came at 4,800 crores, that is 5.6% year on year versus expectation of 4,300 crores. Its NPA improved, gross NPA improved at 2.43% and net NPA came at 0.59%. The ROA stood at 1.2% versus quarter on quarter 1.3%. The stock is trading at a PE of 5.9 times FY26 EPS and 0.9 times trailing price to book value ratio. The overall outlook is neutral for the stock. Thank you.
Good morning. Jindal Steel and Power Limited posted their results yesterday. Result is ahead of expectations. Offtake came at 1.9 metric ton versus the expectation of 2 metric ton. It has grown 2.7% quarter on quarter and 5% year on year. Realizations per ton has grown 2% quarter on quarter and has declined 4.3% year on year. EBITDA per ton came at 11,209, which has declined 2.2% quarter on quarter and 27.6% year on year. Revenue from operations has grown 5% quarter on quarter and is flat year on year. EBITDA came at 2,183 crores, which has declined 23.2% year on year. EBITDA margin came at 18.6% versus the expectations of 16.7%. PAT is ahead of expectations. We also attended the con call of Jindal Steel and Power yesterday. The outlook is positive on the same. Here are some key highlights. The company expects a reduction of around $10 per ton in coking coal prices in quarter 4. The company expects a reduction in iron ore prices as well of rupees 100 to 200 per ton over the next quarter. The company aims to achieve 20 to 25% CAGR in the next phase of expansion with the vision to increase crude steel capacity beyond 16 million tons by FY28. The company has announced an additional 15,000 crore capex over the next 3 years, focusing on value-added expansion, supply chain enhancements, and sustainability initiatives. The Angul expansion is in its final phase with the blast furnace commissioning expected by quarter 4 FY25 and quarterly production projected to exceed 2 million tons from quarter 1 FY26. It is expanding its cold rolling mill complex with a 4 lakh ton mill set to commence operations soon. The company is adding 6 lakh tons of galvanizing capacity and 5 lakh tons of color coating capacity, strengthening its value-added product mix. The slurry pipeline and BOF2 commissioning remains on track for quarter 1 FY26, expected to significantly reduce raw material costs. Captive coal mining at Utkal B1 is set to commence by quarter 4 FY25 with an expected annual output of 5.5 million ton. We also attended the con call of Jindal Stainless Limited yesterday. The outlook is neutral on the same. The company has achieved highest ever quarterly sales with 15% year-on-year growth and 4% quarter-on-quarter growth. Domestic demand has increased by 20%, driving 90% of its total sales. Export volumes were subdued due to weak demand in Western markets, especially in the EU. FY25 EBITDA guidance remains 17,000 per ton. Volume growth guidance is 9 to 10% for FY25, excluding Chromeni Steel. Progress on Indonesia SMS project is expected to be operational by FY27. Nickel pig iron project is ramping up at 65% utilization. Sale of Indonesia CR mill assets is underway, expected to fetch $20 million. FY25 capex guidance is of around 5,500 crores with significant spending on acquisitions like Chromeni and NI Steel and NPI. Thank you.
Good morning. On the FMCG front, Dabur India Limited posted its results yesterday. Results is in line with expectations. Revenue from operations came at 3,355.3 crores with a 10.8% growth quarter on quarter and 3.1% year on year growth. EBITDA came at 681.9 crores. EBITDA margin came at 20.3% with adjusted PAT came at 522.4 crores and the quarter EPS is around rupees 2.9. Stock is trading at price to earnings ratio of 42.5 times FY26 EPS. Following are the key pointers highlighted from the con call attended for quarter 3. Consolidated revenue grew by 3.1% in INR and 5.6% in constant currency. India business grew by 1.7%, driven by volume growth of 1.5%. International business has shown strong growth of 18.9%. Odonil Aerosol emerged as the number one brand in its category. Skincare portfolio grew by 5.6% and healthcare portfolio remained flat due to adverse weather. However, Chyawanprash gained market share. Food business showed strong performance with culinary products growing at around 30%. Operating profit increased by 2.1% and PAT grew by 1.8% year on year. Company is expected to report anticipated sequential improvement in demand due to infrastructure investments and government initiatives, commitment to driving profitable growth through strategic investments and innovations. Our outlook is neutral on this stock. Tata Consumer Product Limited also posted its results yesterday. The result is below expectations. Revenue from operations came at 4,443.6 crores with 5.4% of quarter on quarter growth and 16.8% of year on year growth. EBITDA margin came at 12.7%. Adjusted PAT came at 285 crores. Quarter EPS is rupees 2.9. Stock is trading at price to earnings ratio of 50.7 times FY26 EPS. Following are the key pointers highlighted from the con call. Consolidated revenue increased by 17%, net of acquisitions. Growth was 9%. Indian beverages grew by 16% with organic growth at 9% and tea volumes increased by 7%. The Indian food business revenue surged by 31% with 11% organic growth, and in the international business it recorded an 8% revenue increase. The tea prices experienced pressure, anticipated normalization as commodity prices fluctuate. Talking about the product performance, Sampann continued strong performance with a 23% growth year to date growth at approximately 28%. And in the ready to drink segment, corrected competitiveness issues from the previous quarter, achieving double digit volume growth. EBITDA remained flat due to tea margin pressures. The company focuses on strengthening core and growth businesses, including existing brands like Sampann and Soulful, and exploring new opportunities in capital goods and organic products. It also launched new product variants and innovations, including Quick Cook, Kabuli Chana, and enhanced ready to drink coffee options. Anticipated easing of margin pressures as pricing strategies stabilize, continued focus on long term competitiveness in the tea sector. So the outlook is neutral for this stock. Thank you.
Yeah, that's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So gold already opened gap up, and one should wait for a dip and enter long. Gold April one can initiate a buy around 82,000 with a stop loss of 81,700. On upside again 82,500, 600 is the level where one can book profits. Where in silver one can buy around 93, 93 500 to 400 levels and maintain a stop loss of 90 to 700. On upside, it is expected to test 94 500, 94 800. And in metals, copper one can buy around 830 with a stop loss of 825. On upside, it is expected to test 835, 838. Wherein zinc expected to test 269 to 70 levels. So buying around 267 with a stop loss of 265 is recommended. And in crude oil, one should buy around 63.30, 63.20, and maintain a stop loss of 60 to 50. So prices are broadly consolidating from 60 to 50 to 6400. So buying on dips is recommended for the day, and on upside again expected to test 6400 to 6450, wherein natural gas prices are expected to consolidate from 260 to 280. So for trading purpose, one can sell around 272 with a stop loss of 280. And again, downside 260 is the level where one can book profits. So that's it from us. Thank you very much.